skilled MBA case study series in general management. Pfizer's executive committee, in January 2022, grappled with setting ambitious yet realistic guidance for the year. With 2021's revenue doubling due to COVID-19 products, the challenge was managing investor expectations while strategizing for sustainable growth beyond pandemic-driven success. In 2021, Pfizer achieved a remarkable $81 billion in revenue, doubling from $42 billion in 2020. This unprecedented growth rate set high expectations for 2022. The challenge was to sustain this momentum while managing investor expectations and planning for future growth. The focus was on strategic guidance to navigate the post-pandemic landscape effectively. Investors are keen to understand realistic growth expectations for 2022. Pfizer must strategically focus its efforts to sustain momentum. The challenge lies in balancing exceptional past performance with a return to normalized growth. Identifying key areas for investment and activity will be crucial in maintaining investor confidence and achieving sustainable growth. Managing exceptional performance requires crafting credible financial guidance after an outlier year. Strategic growth planning involves identifying and prioritizing growth drivers in biopharma. Effective investor communications frame analyst calls when performance is driven by one-time events. Portfolio optimization balances near-term revenue with long-term pipeline investments, ensuring sustainable growth. The company, headquartered in New York, saw its revenue nearly double to approximately $81 billion in 2021, driven by the COVID-19 vaccine Comirnaty and antiviral Paxlovid. Key growth areas include messenger RNA research, oncology immunotherapies, gene therapies, and next-generation vaccines, highlighting a robust pipeline for future development. Encore growth versus normalization involves managing expectations after a blockbuster year, anticipating reversion. Portfolio rebalancing shifts focus from pandemic-driven sales to diversified therapeutic areas. Guidance framing balances ambition with credibility to maintain investor trust. Research and development and innovation investment requires strategic capital allocation across platforms, pipeline assets, and acquisitions. Utilize analytical tools to refine growth strategies. Normalize 2021 revenues by excluding COVID-related items to establish a base case growth. Employ a growth driver matrix to align potential sources with timing and revenue potential. Conduct scenario analysis to create guidance scenarios, considering assumptions and risks. Prioritize portfolio assets and acquisitions using net present value and strategic fit assessments. Pfizer should clearly quantify expected 2022 vaccine revenues, prioritizing transparency. Focus on growth drivers like research and development and strategic partnerships. Balance internal research and development with acquisitions to optimize innovation. During earnings calls, executives should maintain a confident, transparent tone to enhance credibility and investor trust. Conservative guidance paired with high research and development investment sets realistic expectations, emphasizing long-term innovation. This strategy builds a robust innovation pipeline, fostering sustainable growth. However, it may not satisfy growth-focused investors, delaying revenue recognition and potentially pressuring stock prices. Balancing these factors is crucial for aligning with strategic goals. Strategic Alternative B involves aggressive guidance paired with mergers and acquisitions-focused capital use. This approach signals strong confidence and accelerates diversification, offering potential for immediate growth. However, it risks overpromising, faces integration challenges, and may dilute focus on the internal pipeline. Emphasizing rapid expansion, it carries higher execution risk. Strategic Alternative C involves tiered guidance ranges. The high scenario sets aspirational growth targets under specific conditions. The medium scenario represents a balanced base case, while the low scenario offers a conservative floor with high confidence. This approach balances ambition with prudence, ensuring transparency, but necessitates careful framing to prevent confusion. Strategic Alternative D emphasizes COVID-19 boosters while maintaining existing vaccine revenue. It explores new vaccines like respiratory syncytial virus and flu, leveraging Pfizer's messenger RNA platform. The approach aims to expand messenger RNA applications beyond infectious diseases, though it risks over-reliance on a single technology platform. The chart highlights potential 2022 revenue scenarios for Pfizer, emphasizing the normalization of COVID product revenues. Despite this, the core portfolio shows continued growth. This balance is crucial for sustaining long-term financial health, ensuring that reliance on pandemic-driven products is mitigated by robust performance across other segments. Acknowledge the exceptional growth of 2021, driven by the pandemic, while celebrating achievements. Present realistic expectations by normalizing growth metrics to distinguish ongoing business from pandemic effects. Highlight the diversification strategy, emphasizing investments in multiple growth drivers beyond COVID products. Detail risk mitigation plans, addressing competitive, regulatory, and operational risks with clear contingency strategies. Normalize outlier revenues to provide credible forward guidance. Diversify growth drivers across pandemic products, core franchises, and new platforms for a balanced portfolio. Clearly communicate past successes and future targets to maintain trust. Strategically allocate capital through R&D, partnerships, and mergers and acquisitions to ensure long-term value.